China is always the first to report GDP each quarter, and it was the first to lock down because of the coronavirus. So while the rest of the world will be waiting for the June quarter GDP to see the damage, for China it was the March quarter, and GDP contracted by 6.8%. China started reporting quarterly GDP in 1992, and it's always since then kept growth above 6%. The last time it acknowledged a fall in GDP was 1976. The timing difference between China and the rest can be seen in this chart of share market indexes: the Shanghai Composite, the Australian All Ordinaries and the US S&P 500. Now, the Chinese market had its fall at the end of February after a 2-week closure, and it wasn't very much of a fall by comparison. The ASX and New York markets are climbing out of a much deeper hole. And they took another step out last night and today, after President Trump laid out a plan to reopen the US economy. It was up 0.5% in New York, but more than 3% in Japan and Korea today, and 1.2% in Shanghai. It was affected by the GDP number. The Australian market went up 1.4% today, with Qantas and Sydney Airport leading the way after the Morrison government agreed to support the airlines. Virgin Australia, however, stayed in a trading halt. The US oil price slipped below $20 a barrel last night, while other commodities didn't move very much at all. And the Australian dollar bounced back above 63 US cents. And finally, just because it's Friday, here's a graph of the relative importance of a few things at the moment that's doing the rounds on social media. Up are the internet, alcohol, and sweatpants, what we'd call tracky dacks. Down are the car and shaving. Toilet paper was up and now down, and coffee unchanged, right up there at the top. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.